called negotiations, right? Politics.
And we're out of time. So you.
Reserve decided last week not to lower interest rates. Should they have made a small interest rate cut at that time? Did they wait too long, perhaps?
Well, one answer is the Fed made a decision on Tuesday and the bad news data came out on Friday. And so if they'd seen the future a little more perfectly, maybe they should have done things a little bit differently. Look, what the Fed's going to do is it is going to cut interest rates, and it's almost certainly going to do so in September, and it may cut them a few more times this year. This is part of that same dynamic. When inflation got out of hand, it raised interest rates. But remember, I said the economy's getting back to normal. And so for interest rates, getting back to normal means no longer at rates above 5%. Let's get rates down a little, maybe to 3.5% for the official rate. And so that's where the Fed's going. It's going back to normal. It didn't do it last month, probably wishes it did, but it'll almost certainly do it over the next few months.
Okay, so if we see an interest rate cut in September, how much would you expect the Fed to cut it by?
There's a lot of debate in financial markets about whether the Fed will cut by half a percentage point, effectively taking last month's cut and this month's cut and putting them together, or just by a quarter of a percentage point. Look, one answer for your viewers is if the Fed is right or wrong by, a quarter of a percentage point here or there, or if it takes a month longer, we might wish it was a little bit more perfect, but it's still not too far from what's right.
And when that cut happens, how long does it take for it to trickle down to your average citizen?
There's a bunch of ways in which it trickles down to your viewers' lives. The first is, when will the rate on my credit card go down? When will the rate on my mortgage go down if it's an adjustable rate mortgage? And the answer there is within a couple of weeks. So you'll see a little bit of relief coming pretty soon. The other way this affects your life is a lower interest rate will stimulate the economy a little or slow it less. And so you'll see a little bit more spending in the economy maybe over 6, 12, 18 months from now. And the final way is it affects inflation, and that effect takes even longer still. And no matter what the Fed does, I think the overall trend we're seeing right now is inflation's on the way back down to normal. And in fact, it's most of the way there. And if you go to the store this week, you'll notice the prices are remarkably similar to what they were last week.
I feel more relaxed already. Justin Wolfers, thank you so much for talking with us. Appreciate it.
Great pleasure, Rosemary.
Seems like the plan is in motion. Hey, y'all, gravity, any day above ground, live it. Hope you had a wonderful Sunday evening. I hope you have a great start to your work week or school week, as the case may be. So for those who are not aware of what happened, I think a screenshot will be more of a indicator of what's going on out here in the streets. Don't panic. We will explain what you're going to see.
Copyright disclaimer under Section 107 of the Copyright Act 1976. Allowance is made for fair use for purpose, such as criticism, commenting, news, reporting, teaching, scholarship, and research. Fair use is use permitted by copyright statute that might otherwise be infringing. Nonprofit, education, or personal use tips the balance in favor of fair use.
You know, let me go here. I'm gonna move on. There's a growing concern in.
What you're seeing on the screen is Japan's Nikkei, which is their stock market. This was today. They just closed, I think, an hour ago. They said this was the worst day of trading in almost 4 decades. They said it's even rivaled Black Monday here, the stock market crash of 87. And as we all know, economies like this tend to rise and fall. Now, for those who don't know, Japan has been in a recession for a few years now. And the system can only take so much. But as I say, the plan is working. The plan is working. And as you saw in that first video, the Fed's going to have no choice but to cut interest rates, which, again, should help the economy. But as I say, the plan is working. DSA, hello. Wallow J, hello. Reparations Nation, hello. Jerry Bedford, hello. Anthony Ruger Phillips, hello. Missions Vision, hello. Yat Gavius Prime, hello. And for those who haven't said anything in the live chat or the comments, good morning. The plan is working. Because here, there was a bad jobs report that came out. I want to say Friday. Yeah. Oh, you don't believe me? I figured you didn't. Well, we're going to show you. But notice, they didn't have y'all really listen to that.
You know, let me go here. I'm gonna move on. There's a growing concern in.
Everything is connected. The plan is working.
Than people expected, and the fact that the unemployment rate went up 0.2% is probably not that surprising. I've read estimates that we need 200,000 jobs, new jobs per month, just to keep the unemployment rate stable. So,
but the Democrats, Kamami and Joe Biden, via their social media and sending out Stud Pierre outside, would have you believe that the economy is doing well and jobs are aplenty. Remember, every time we say, where are these jobs? They'll be like, well, look at the numbers. Look at the numbers. Okay, numbers can be inflated. Numbers can be made up. Where are these jobs? There's still hiring signs all over the place. So where are they?
So a print in the 114,000 is not surprising, and you know, we see reports that the workforce is increasing, so it's going to take more jobs per month to keep that rate steady.
More jobs. So the current rate is not enough.
But definitely a weaker number. Definitely going to raise concerns now that the Fed is, you know, behind the 8 ball. Probably increases the probability of 2 rate cuts this year.
So is the Fed behind the 8 ball? Do you think?
Well, I mean, if this number is as written and doesn't have any hurricane impact, you know, definitely a weak number, and it's going to raise that concern. I think it still remains to be seen if the Fed's behind. GDP is still admittedly slowing, but still pretty strong. We're seeing pockets of strength in the economy. We're definitely still seeing signs of inflation, but clearly the trend is moving in the other direction.
And you just mentioned that we need 200,000 jobs per month just to keep the unemployment rate stabilized. I just did some quick math with the revisions factored in. Right now, we're averaging about 169, 170,000 jobs over the last 3 months. Well, this report included. Once you kind of take that into account, and Joe, I'll kick this one your direction. Does this squarely put the September cut on the table for the Fed?
I think this just about guarantees you're going to get a 25 basis point cut, to be honest with you.
The plan is working. The plan is working. This is all to make Kamami look good. The plan is working. Nothing better for a hopeful president than the party that is in control within Congress having a Fed interest rate cut before an election. The plan is working.
I think what this does is it puts a September, November, and December cut on the table. I think we can begin talking about the possibility, if not probability, of 75 basis points of cuts this year.
Woo-wee! Almost a full percentage point. Lord have mercy. The plan is working.
Look, the unemployment rate went up to 4.253%. That's going to be scored as a 4.3 because 420,000 additional people entered the labor force. So we want to put this in context. The unemployment rate's not going up necessarily because we've seen a lot of layoffs. It's going up because people are moving back into the labor force to take advantage of that 3.6% increase in overall wages. That's what you want to see as an economy normalizes. So my sense is we're still on track to have an unemployment rate around 4.3% at the end of the year. That's in line, at least with my baseline forecast.
Wait a minute. Didn't they tell us that the number was down under, it was under 4? Didn't they tell us this months ago? Pepperidge Farm remembers this. So our politicians lied to us. Who's shocked?
And the general weakness we saw, and what we want to pay attention to here is that, hiring in professional business services has just slowed to a crawl. You can see that we got a little bit of a disappointment in terms of how many people were hired by the state governments. And leisure and hospitality didn't outperform normally the way you would expect in August. So there's a lot on the table, but I think the primary takeaway is labor market's normalizing. It's below what we think is 150,000 is the break even. If you get numbers below that, you're going to continue to see that unemployment rate increase. And the Fed simply is just going to have to move to cut rates, make that rate less restrictive. And as you, Shana and Brad, as you know, we were one of the ones calling for a July rate cut. They didn't do that, but we'll get it in September.
Joe, what do you think about this talk more and more here? I'm taking a look at the latest numbers coming in. It looks like the rate market now is pricing in that there's a 63% chance of a 50 basis point cut in September. Is that something that you think should be on the table, is on the table?
I think that it's going to be talked about. Look, as an economist, I don't get too wrapped up in market volatility around what the federal funds market says. There's actually a rational argument for hiking by 50 basis points. Is if you think the real neutral interest rate is much higher than what the Fed does, say over 2%, then it would imply that the current federal funds rate is too tight by about 50 basis points. And if the Fed wanted just to go ahead and put the federal funds rate where it should be based on the prevailing rate of growth in the economy, on inflation, there's an argument to be made for cutting by 50 basis points. And we're going to have that over the next 6 weeks.
I see you nodding your head, Mark. What do you think?
Well, I think we probably will see 50, maybe 75 by year end. I think a 50 basis point rate cut, though, could potentially send some shockwaves through the markets. I think would help underscore the argument that the Fed's behind. So I could see them doing it maybe in stages, but I think 50 could be sending a pretty strong message to the market.
The plan is working. The plan is working. They said by the end of the year. What is the end of the year? The election. The plan is working. Why not cut interest rates 2-3 weeks before the election? Then come back around and have Kamami come outside and lie and say that it was because of our initiatives that we've been doing all over the place, because they know the regular average American citizen is not going to watch things like this. And the normal news is not going to tell them the truth. They're not going to bring their business people outside that are really going to talk to the people.
Market that may not be received that well.
Mark, the cost of being late, I think when you take a look at now with that 4.3% in unemployment rate right now, the Somm rule has been triggered. We are a half of a percentage basis point here higher than we were a year ago. Does that signal a recession? I guess when we talk about the chance here that the Fed was late, what does the cost maybe of being late look like?
Well, I think, at Janus Henderson, we've been saying that we see a soft landing in the cards, but clearly a soft landing is you're threading a pretty thin needle. So clearly now we're a little bit on the side of maybe closer to a hard landing, but I think we're still pretty confident that we're going to see a soft landing. But clearly this is going to raise some concerns. And
just study those numbers, family. He's see, and Pursuit, they're not going to tell you. See, your regular people ain't going to tell you that.
Sinful. It's the devil.
Get to work.
That's what they told us to do. Get to work. There's jobs aplenty outside. This is what they told us. And now we're looking. There's jobs aplenty. Why is the market's not responding like that? If there were jobs aplenty. They sat up there and let 1 month of better than expected jobs being created to fool everybody that Biden was doing things correctly. And I know, I've said his name for a few times and I didn't play this. I know.
Is a living, breathing insult to my existence.
Yeah. Black's Gun, good morning. You seem new, but welcome. You said, why does Japan's stock market crash and make our interest rates go down? Because they don't want it to happen over here. Sorry. Again, you didn't hear me before. Japan has been in a recession for about 3-4 years now. It was just a matter of time before they crashed. It was $2.9 trillion wiped out. Yes. So Japan's stock market crashing, it's going to signal the other markets in Europe and here and in Africa and South America to make sure that it doesn't happen here and on their grounds. So they're going to cut interest rates to get more money flowing and to prop up the economy enough where that buzzsaw escapes us. Because one thing the Democrats cannot afford going in there with shaky Kamami is a stock market crash on the Democrat watch. They can't have that. She will. If the stock market crashes today in the U.S., Command Me might as well drop out. The Democrats will never survive that. They can't blame the Republicans. So let's finish this.
I think, look, obviously interest rates are a key driver of the economy and the markets, but we also look at CEO confidence, anecdotal information from the companies that we're invested in, and definitely seeing some signs of weakness, but we're also seeing a lot of signs of strength. And as active investors, we focus on sectors and areas where we see companies that can buck the trends.
Joe, just lastly, we were taking a look across all of those readings on the screen a moment ago. I mean, it was a miss on every single category here. And so that considered, when does bad news actually start to become bad news and the markets have to price that in as such?
Well, you would need to see the hard data fall off the cliff, and that's just not what's happening. We got an overreaction, in my opinion, to an ISM report. We're going to get the ISM services. That's really what this economy is about on Monday. We'll see where we go with that. Look, one thing on the SOM world, we want to be real careful around that. That's a rule of thumb that, in my estimation, probably is not going to survive the pandemic era shocks. My math over how you calculate the 3-month moving average over the past 12 months needed to be 4.26. We only got to 4.253. So it's important that we don't hyperventilate over that and begin loose and undisciplined talk around a recession. Look, through the end of June, the economy, excluding trade, inventory, and government, and I want to emphasize government because government plays a big role in the economy these days, expanded at 2.6% rate. Economy's not in recession. Hiring is just slowing, in my opinion, because we've been holding on to employees, probably too many employees, for a long time. We're not laying them off. We're just not hiring as many as we once were. Moreover, the increase in that unemployment rate had more to do with people entering the workforce. 420,000 individuals entered the workforce in July. That's what caused that to go up. From a policymaker perspective, that easily could be interpreted as a virtuous increase in the labor force, because we are still short labor in this country, and we will be short labor for the indefinite future.
Well,
damn. I was hoping he didn't say that. Damn, we in trouble. Fuck. All right, we're going to explain what that means. So I pulled this up. So it says, understanding America's labor shortage, the most impacted industries. American businesses are creating hundreds of thousands of jobs each month, yet a significant number of positions still remain unfilled, especially in the professional business service sector. Professional. Closer look at what has happened to the labor force can be better described as a great reshuffle. While quit rates remain high, hiring rates continue to outpace them as many workers have been transitioning into other jobs in search of improved work-life balance and flexibility, increased compensation, or strong company culture, which is what everybody saw during the scamdemic. People staying home, learning new trades, new industries. The work from home, remote has been huge because people are tired of doing what they were doing before the scamdemic. Even when you go look for these jobs now, they're all advertising great work-life balance. That's just an enticement. Now, if you see that with a restaurant job or a service job, you need to go write to them and tell them to go screw yourself, because that ain't happening. Food service and hospitality businesses struggle to retain workers. We know why. Because y'all sit up there and kill us for profit. Not like that, YouTube. You assholes, you. because I know how y'all are. So here's your quick rates as of 3 months ago. So leisure and hospitality lost 4%. Wholesale retail trade lost 2.6%. Financial activities lost 1.3%. Professional business services lost 2.4%, and durable goods manufacturing 1.6%. So those were the biggest. Nasty work. Plus, people are eating out less. So it's nasty work. So what we'll do is we'll put this in there because there's a lot of information to intake, and I don't want to bore y'all with that. So we'll put this in the chat. Y'all can read that at your leisure. This wasn't going to be a long live. I just wanted to bring you awareness of this. So if you do have stocks out there, I would call your people who are controlling it, or if you're controlling, get into your portfolio and start looking and watch the markets today. Wouldn't be America without another Black Monday, since everybody is still in the Olympic euphoria of what happened yesterday. So I believe that is it. And like I said, we'll be doing the live later. I'll expand on this a little bit more when we talk about BRICS, what this could mean for the BRICS nations. Because I'm just going to tell you this right now. Now that Japan is having this crash, don't think the prime minister, his cabinet, and the imperial, yes, the imperial guard, you know, the ones that really run the nation, are not thinking of calling up Putin and them. No, Miss Nisi, good morning. No, they did not take it back. He won. That's his medal, which he will go defend in 28, Lord willing. By the way, Jamaica, since Miss Nisi brought this up, your man gave his concession speech. He even admitted that he didn't run well. I saw y'all this morning arguing about odds and all that. Doesn't matter. The Jamaican was the favorite. Noah Lyles had the best betting odds. There's a difference. I'll help you. And then I'm getting out of here. Noah Lyles, yes, he had the betting favorite because everybody wanted the upset. You make more money on an upset. Maybe y'all don't understand how sports betting works. You would have made more money if he won. The Jamaican, you probably would have just broke even. Maybe that'll help you. But anyway, I'm going to get up out of here. Hopefully you learned something. If you did, I've done my job. If not, I'll try to be better next time. I will see you later today. We'll have fun. Watch out for the upload. Make sure you have your alerts on. If you're not getting alerts, all you got to do is unsubscribe, and then resubscribe. Make sure the bell icon is hit so you can see my BS and hear my BS. Maybe you'll even get some recommendations on things that you probably didn't think that you needed recommendations on. But y'all take care, stay safe, and you know what to do when the agents of chaos come to mess up your existence.
Get to work!
If you have to. But if you don't have to, avoid yourself from doing this.
Time's up.
But did we have a good time here? Hello?
At the end of the day gotta end.
Get your money up, not your funny up. Big fucking move.
That's it.